Hi folks, hope you're all good. It's a quick video about the banking system, which I've always had problems understanding. So, in fact, I did a video quite a few years ago, I think it was 11 years ago, on this subject, and I may have got most of it right there, but now I think, but I definitely did get some things wrong, and I think I may have just got it straight in my head. How all this money creation and banking works. So let me run it past you guys, see if some of you may be cleverer than me and be able to give me some feedback on this. So, the banks. Well, first of all, there's the bank accounts that we all have. So we all have bank accounts, and those are simply those are basically what the bank owes us. They're all just IOUs from the bank to us. If I got a bank account with £1,000 in it, that just means the bank owes me £1,000, and is keeping track of that amount. There isn't any, it isn't backed up with anything as far as I can see. There isn't some other equal and opposite amount of money the bank has. It's just that they owe me that amount. Now, the slight behind the scenes thing here, which I could be wrong about, is that if you pay some money to someone who banks with a different bank, or if you just move some of your own money from your bank account to another bank account which you have with another bank, then the bank has to pay the other bank that amount of money. So if I pay my friend £5 who's banking with another bank, the bank will obviously deduct my bank account with by £5, which is just changing the numbers basically, increase the other person's bank account by, oh sorry, they will tell the other bank to increase the other person's account by £5, but also behind the scenes they will pay them this money, they will pay them £5. So, okay, so that's the bank accounts that we all have, or most of us have. Then behind the scenes, they have money. I think it's in a account with the central bank, which is the Bank of England here in the UK, but it's called the Fed, I think, in the USA, and the European Bank, Central Bank, I think, in Europe, and I don't know what the names are in other countries. So I think they've got a bank account at the central bank, each of the high street banks, but the amount in there isn't the same amount as the deposits or of loans they have to people. I think it's just some lesser amount but substantial amount of money. Some of it exists, some of the reserves are also cash, but I'm not going to really talk about cash here. Cash is like generally not that important a part of the system, I think. If the bank has some cash, that cash belongs to the bank as far as I can see. It's just their money, just like your cash is your money. Um, and obviously, with the bank, the way the bank accounts work, they have to provide, if you ask for cash, they have to provide it. But they don't have anything like enough cash to cover it if everybody wants to withdraw it. That's a run on the bank. So all that story is true. So the other part of it is loans. So the banks can create loans to people when people want loans, when people want money up front. They the bank just creates the money in their bank accounts, or tells another bank to increase the person who's having the loans bank account by they give the correct amount, the amount they're borrowing, and but the bank, that money, but also they create a kind of like a loan account, which is like how much money they've got to pay back. I don't know if it's called a loan account actually, but anyway, the bank's definitely keeping track of how much money they are owed, while the money that gets created usually quickly gets passed around just as normal bank account money at that point. So the loans, as I say, the money is created out of nowhere, and they're not backed up with anything. It don't have to be the same amount as the deposits or anything. Though in the economy, I think generally the amount of all the total amount of bank deposit money, the money in all our bank accounts all added together, I think does equal a similar amount to the amount of loans all put together. But that's because all the money is created as loans, so it ends up being the same amount. But I don't think each bank has to balance it. I believe I could be wrong about that. But the other, okay, so the crucial stuff as well is when loans are paid back, that money vanishes again. So the bank just zaps the money, I think. But the interest paid is just money that is paid to the bank. So that is getting a bit confused. What happens when a loan, when interest is paid? When interest is paid to the bank, I think they must just increase their reserves. So it's like their money that belongs to the bank. Then it just transfers from the person, the ordinary person, to or company or whatever's made the loan, whatever's paying it back, paying interest, just goes and becomes an increase in the bank's money, which, as I said, mostly I think exists as an account in the central bank. And that's all I know. It could be wrong, but I don't know, I might be right. The thing I was saying wrong in the video I made before is I was talking about people deposit money into the bank and then they lend out against that. I knew it wasn't quite the same money that gets lent out. That I knew money was being created out of nowhere, but I thought there was some sort of thing where it was connected to the amount of balances, the amount of current accounts or whatever, or the amount of deposited money, all the bank accounts put together. So, but I don't think that's the case. So I think, as I said in the previous video, though, I do oppose this system. I think I can see problems with this stuff. I think one problem is that if money is being created as loans, then in the boom times, it seems like more people want loans, or there's more loans going on. So that creates more money, which then creates more of a boom. But then if there's a economic crash, then I think there'll be less people wanting loans because there'll be less sort of customers waiting to buy things. So there'll be less reason to like start a business or do something adventurous with your money. So, or to like start an enterprise or something. So that would shrink the amount of money, which would then depress the economy further. So it seems like this will make this money creation way seems to make more heavy sort of booms and busts. Another problem is because each bank's like a profit making thing, it just seems like that they are being trusted with tons of money, and there must just be ways that they cream off money. I think there are. I think the central banks are paying, at least in the UK, paying money just to the banks just for this kind of interest on the reserves that they've got at the central bank. I mean, that's just a load of money just going to them because they are the oligarchy. It just seems and the whole thing's just extra complicated because, as I said, if you pay money to your friend, all the system really needs to do is deduct your account by £5 and then increase theirs. That's all. If it was a state-run thing, they could just do that. I don't see why any money has to be like moving around between these organizations. Oh yeah, there was one thing that I was confused about, which I think I've kind of figured out now, is that what the thing was confusing me for a long time is that if a bank can create loans out of thin air, why doesn't it just create loads and loads of loans? Why is there any restriction? Why does it hold back at all on lending? But I've kind of realized that if they do zap, if all the money paid back just gets zapped, so it's just down to the interest that is the profit for the bank. But then they do compete with other banks. I mean, they are an oligarchy, so who knows if the competition is as much as it could be. But they are driving each other's like interest rates down. So yeah, maybe making a loan isn't that profitable. So if they made a lot of dodgy loans that wouldn't get paid back, maybe chasing them up would just cost a lot of like time, worker sort of time. So that might explain why they're not a complete license to sort of print money like that. So because I was a bit confused about that. The thing that helped me with this research, this was a document made by the Bank of England about 10 years ago. I can post a link to it. And that document clarifies two things. Anyway, it clarifies what the money, the thing I was saying just now, that money loaned out isn't really the money that's put in, deposited in accounts. So there's that. It also clarifies that a thing I was taught in university, which is stuff to do with central bank money being sort of lent around and expanding up to like a bigger thing, but it's all like based on this foundation of the central bank money. I've heard also since then quite a lot that is false, but the Bank of England has confirmed that is false, or at least one person in the Bank of England who's trying to educate us has said that in his capacity as a like Bank of England communicator. So I'll try and put a link to that document. So I found that extremely helpful. In fact, yeah, that's what I think got me to see the light. There is a missing, well, probably at least one missing part of the puzzle for me, which that document from the Bank of England does try to explain, but I didn't understand it, is how the bank interest rate, or the bank, what do they call it, the base rates, the bank rate, that's also called, I think, like the central bank's like rate that it announces every month, which seems to affect how does that figure get passed on to the high street banks? I'm still completely confused by that. I don't quite understand why mortgage rates should be following this bank rate. I mean, I've heard the central bank's rate is what the banks get on their deposits. But why, if they're creating loans out of thin air, surely that's nothing to do with that, and that they're both rates that the bank's gaining. So I don't see why one isn't a cost that has to be like covered by the other one. So I really don't understand that. If anyone wants to help me with that would be fantastic, or put me right on anything I've got wrong here. So anyway, that's everything, I think, and good luck with making money, people. All the best.